Good afternoon, and welcome to PincusCo Live, the weekly New York City commercial real estate broadcast. Thank you for joining us for our 5th episode. Today we are focused on Gowanus, a neighborhood set to undergo one of the most rapid changes experienced in recent years in the city. Developers have filed plans for thousands of units in a span of only a few months, and more to come. Yet there have been very little sales activity. We want to take a look at the development and the sales market now and in the coming years. Both our guests are deeply involved in this neighborhood, one as a developer and another as a broker. Sam Charney leads Charney Companies, which is currently developing more than 2 million mixed-use square feet in Long Island City, Williamsburg, and Gowanus. Before launching Charney Companies, he worked for Two Trees Management, where he developed more than 1 million square feet of commercial office space and residential apartments. In Gowanus, they've got 3 projects with a total of about 1,150 units planned. Our second guest is Dan Marks, who is a partner and team leader with the brokerage-focused brokerage TerraCRG. He brokered the largest residential site transaction in Brooklyn last year, which was in Gowanus. He has over a decade of commercial real estate sales and leasing experience, handling over $1 billion worth of transactions since joining TerraCRG in 2012. I'm Adam Pincus, founder of the 3-year-old media and data publishing company PincusCo Media. We publish newsletters on transactions and new development, which are populated using our proprietary data, which we offer for sale. So Dan, I'd like to start with you first. Just going back to this, there's been an enormous number of large new building filings, and there's more to come, yet very few sales. Why the disconnect?
Thanks, Adam, and thanks for having me on today. Also, just want to give credit to Sam and his team and partners over at Tavros for participating in that largest sale last year. Not only was it the largest residential development sale in Brooklyn, but it was also the largest one in New York City in a year that was relatively down in large residential sales, but still a significant transaction. So just want to give Sam and his team credit on that as well. But getting back to your question, Adam, as far as a lot of new filings coming in, but not a lot of new sales. I think you need to look back historically. We track every transaction in Brooklyn, but focusing on Gowanus for this conversation, in the last 10 years, there've been about 53 transactions in the rezoned area. Of those, about 20 of them were over 100,000 square feet, or approximately $10 million plus. And so, most of the transaction volume has actually already happened. And so you're not going to see a tremendous amount of sales volume, especially for these larger sites, I don't think, happen, just because, again, developers like Charney and Tavros and other developers who have seen opportunities in this neighborhood and who were willing to take on the zoning risk took it, and now they're planning on developing those sites. There will still be some sites that were holdouts or businesses that are operating there that they just can't sell for whatever reasons, but by and large, the big site transaction volume has already happened.
And Sam, as you're looking to develop your sites, as you're looking ahead, what do you think the market's going to look like, in 3 or 4 years when you start delivering your units?
Yeah, I mean, we feel great about the New York market, and as Dan was saying, we took the entitlement risk. Not only when the neighborhood wasn't zoned residential, but in the middle of the pandemic, right? I mean, we closed on Union actually right before the pandemic, so early in entitlement risk. Douglas, we closed on mid-pandemic, literally like 3 months after everyone fled New York, and Nevins at the end of last year. People were running from New York and going to, Florida or the Southwest. And, for the past few years, we've seen institutional capital chasing yield in those markets to the point where cap rates are down into the low single digits in places like Atlanta. And New York is back, trading at kind of 5 caps. So we saw massive amounts of value in New York and said, if everyone's running away from New York, we want to be here. And, it really wasn't rocket science. It was just kind of thinking about the fundamentals of the New York market and understanding that New York economy is the most diverse economy in the world. the talent is still here. And it's proven itself, luckily, in what we're seeing today in the market. It is, anecdotally, you hear from people, it's almost impossible to find an apartment in New York right now. And that's actually becoming truer than I even thought. We're seeing rents over at our Williamsburg projects, every day at over $100 a foot. Numbers that, pre-pandemic we were underwriting in the 70s. So New York has just seen a massive rebound, and 3 to 4 years out, we feel great. The Gowanus is a neighborhood that has very little residential currently in it, has tremendously established residential neighborhoods in Carroll Gardens and Park Slope adjacent to it, with traditionally low-rise housing, landmark limitations, so very little development in those neighborhoods. And I think that what you'll see is real pent-up demand for people who want to be in those neighborhoods, but either don't have the ability because there's no housing, or the product just isn't there. There's no real kind of new buildings. The newest buildings you can really refer to are like the 4th Avenue corridor.
Looking at the pricing in or looking down the line, where do you think price per foot is going to be, both from your perspective of leasing, and then Dan, in terms of selling?
Yeah, I think leasing, we're certainly looking at rents and underwriting 70s. We're not trending rents. We're using what we think are extrapolated rents from the adjacent Park Slope and Carroll Gardens markets today, and so we're comfortably underwriting 70s and hoping we outperform that.
And Dan, looking at from the sales side,
I want to address that. I just want to sort of take a sidestep here for a second, Adam, and I want to point people in the direction of downtown Brooklyn. I think it's a good case study for the concern of too many units coming to market at any given time. If Downtown Brooklyn Partnership publishes reports all the time, and they have one in particular that looks at the 2014 to 2018 time period. During that time, 9,100 units were delivered to downtown Brooklyn during that time. I think the average lease-up time to lease up those buildings was less than a year. And that neighborhood now is still getting new developments, is over 95% occupancy on a regular basis. And so there is certainly demand to live in this part of Brooklyn, and I agree with Sam completely. I think that because there's been so little opportunities to live in this neighborhood in a way that they're going to develop, our expectation is that the demand will be very high for residents to be there. Regarding land prices, we obviously track those closely. We're working on a number of transactions now in the neighborhood. The high watermark, whether Sam's proud of it or not, is when him and his team purchased the casket company properties through our marketing efforts in conjunction with Avery Hall. That was around $235 per square foot on a per buildable basis. That has not been topped yet. It certainly will, based on market feedback we're getting on some larger sites that we're working on in the neighborhood. Our expectations is we'll be able to hit and perhaps exceed $250 per buildable, which is what I always thought that land value should be post rezoning. I thought that that's where you would sort of see that pop. Now, keep in mind, land values are going to stay in check because construction costs are very high. Rents are already being underwritten, like Sam was saying, in the 70s. But with the 421A expiring in June, nobody really knows how to underwrite these sites anymore. So until we have guidance from Albany and what the new programs are going to look like, it's very hard to underwrite what land values are going to sort of shake out. Because if the sites become more restrictive for developers, or if AMI levels or affordability changes, obviously they're not going to be able to pay as much because they're not going to be able to charge as much for those affordable portions, unless market rents go up, unless construction costs come down. But I think those are you have to track those closely. Yeah.
To compare, just very quickly, what are the land prices in downtown Brooklyn right now?
Yeah, obviously depends on sites, and Sam, you probably look at a lot of stuff, but it'll range, from $250 per square foot all the way into the 300s. You'll see asking prices for land, around $400 per square foot for high-end sort of condo type sites. So that's sort of it's a big range, but that's sort of the ballpark. Maybe Sam, you have some insight.
Yeah, no, I think that's right. I think that, New York is so neighborhood specific, but really like micro neighborhood specific. Like you could talk about the Gowanus and you could say, okay, certain stuff is part of the rezoning and has MIH 1 or 2 requirements. Other parts of the neighborhood where you can do a condo will certainly trade for more. So, even this small neighborhood like the Gowanus has varying land prices all around it. And so I think there's—
Sam, can you kind of continue on that with the idea that there's basically these large sites, and also Dan, if you talk about this, and then there are the smaller sites that are not impacted or not touched by the MIH rules. What are the pricing and what are the areas for that?
Yeah, I think I'll defer to Dan's judgment when it comes to land pricing. We are a lot in the pipeline right now, so we're not necessarily looking at new land deals, especially with the uncertainty of 421A and what's going on right now. And I think just to touch on the first question that you asked, Dan, about new starts relative to how many apartments are really going to get built. I think what you're seeing is a lot of people who are permitting for 421A right now, knowing that the program is expiring or sunsetting or morphing into something different. And not only do you have to get your foundation element in the ground before June 15th, but then you also have to complete construction by June 2026. So there are real potential barriers and pitfalls if you don't start in earnest and really have a plan to complete a project over the next few years. And I think that you have a lot of owners who are not developers and aren't really sure what to do. So they've taken a little bit of guidance and are going out and entitling right now with the plan to figure out how to get these things built or try to get them built. Or call guys like Dan and try to sell the sites.
So I want to go back to some of those. Those are very interesting issues that I want to look at. Just quickly with Dan, just with the idea that there are sort of bifurcated types of land deals out there.
Yeah. So it really all hinges on the requirements for mandatory inclusionary housing, which is really going to separate, at least under the current 421A plan, whether people are going to be looking to do rental development or condo development. For sale housing has done very well in the surrounding, in Gowanus in particular as well, but also in Park Slope and Carroll Gardens, of course. Under the mandatory inclusionary guidelines, if you're building less than 12,500 square feet of residential, you don't have to provide inclusionary housing inside that project. It'd be too prohibitive. And so you'll probably see an uptick in transactions for sites that really wouldn't qualify for bigger buildings more than 13 or 14,000 square feet. You could have a little commercial component on the ground floor. And so you'll see that land trade, around $300 or $300 plus per buildable, because those are going to be for sale housing that's built, and the for sale housing sale numbers there are climbing.
Go ahead. Are they concentrated anywhere? Are they in the north, south, east, west? Is there any geography to that?
No, it's all over the neighborhood, because if you look at a development map of sort of the largest sites, they're sort of concentrated along the canal corridor. Some of them along 3rd Avenue, a lot of them along 4th Avenue. But when you start going into those side streets, that's where you start to see a lot of 25, 30 footers. And because of the size of those lots, you really can't build large rental projects. But they're scattered throughout the neighborhood.
And Dan, I want to ask, this is just stepping back for 1 second, one sort of historical question. We were looking back and talking about this, that Shia Boyle Green and Toll Brothers were in there sort of in 2004 or 5-ish, and they never ended up building stuff. But there's some other people who've owned for a long time who are holding on. So who are some of the old timers that are building stuff, and then kind of the young guns that are out there now?
Yeah, I think, one of my favorites and one of the pioneers in this neighborhood is a lady named Dolly Williams. Her and her family have been operating their business in that neighborhood for a very long time. If you're in that neighborhood, you know who she is. They've been holding on for a very long time. They've operated their businesses there for a long time, and they are going through the process of filing for plans right now and intending to develop that site on their own. But that's really their business. They're in the construction business, and so their plan is to develop it on their own. There are some other companies in the neighborhood that have been operating there for a very long time. SJ Fuel, for one, is a site that I think people drive past frequently on 3rd Avenue. There are other owners, electric and plumbing supply companies that are in the neighborhood, and so they've got large footprints, but they're also operating their businesses there. So it's not really clear if these people are going to be transacting or not. But what you are seeing, and what Sam alluded to, is that some of them are going ahead and filing, putting together a team of architects and expediters and filing their plans, working on getting a foundation element in the ground, because if the change is significant in the 421A, it could be a significant change in the value of their land. So by getting ahead of it, if the intention is to sell sooner rather than later, like Sam said, you have to complete your construction in a 4-year time window, which means you kind of have to start your development process sooner rather than later in order to make sure you meet that comfortably. We'll see where that goes. But you have those folks, and you mentioned Toll Brothers. That site was then purchased by Lightstone a few years after they gave up on the site. That's a really good case study for developers to study about, if you build it, will they come along the canal, how to activate that canal in ways, what works about it, what doesn't work about it. And then PMG entered the market in 2012. They were really the first new wave of developers to come through the neighborhood and plant their flag and hold on and wait. And they did that, and they had about, I think, 4 projects that they controlled during that time. They currently have one left that they're intending to develop. We helped them sell one, and they've sold a couple on their own. And then after PMG came into the neighborhood, then you saw domain companies. They've done a project with Vorea up in Greenpoint. This was their first foray into Gowanus. And then from there, I don't want to leave anybody off, but Avery Hall has taken a very aggressive approach in acquiring properties in this neighborhood. They've got a tremendous number of properties to develop. Of course, Tavros and Charney. We've had the pleasure of working with them now on two transactions. And so those are the most active sort of new wave of developers to come in and take on that zoning risk. Some of them have taken the risk for almost a decade now, and some of them have taken it for 2 or 3 years now. But I know all of them are relieved that the rezoning finally got approved back in November, so they could actually start developing.
Sam, I wanted to ask, this is a question about if one of these like non-professional developers, or they're trying to get entitled or get it in the ground and get it going. As a developer, like, what are your thoughts? Not that you can speak for another developer, but what are your thoughts on buying a property like that someone else kind of got rev the engine?
Yeah, I think there are developers who are okay buying off of somebody else's built plans and then amending and kind of working off of that. It's not really my forte. I don't like to do that. We really try to be in the weeds from the early steps of the development process. We're getting all our market studies done. We're figuring out what the right product to build is. We're value engineering the building as we're building and making sure that we're getting the right aesthetics done and creating the right product for the market. So, I've seen it. I've certainly been offered sites like it before. I haven't bid on them, and they've transacted and gotten built. But I can't really opine on what the demand for sites like that is. For me, it's certainly not our cup of tea.
Yeah, and I think developers like Sam were willing to take on the zoning risk in order to have the ability to develop from start to finish. I think people who didn't really have the stomach to take on that zoning risk, now that the zoning has been approved, they don't really have a tremendous amount of options to go and buy something that's 100,000 plus buildable square feet. And unless a private owner has at least started the process to try to qualify for the 421A, there's basically no chance you can start today and get it. So you have to sort of weigh that risk. It's like, okay, I don't really love the plans that they're going to be putting forth and all this, but perhaps I can amend them later. Let's just get this approved. Let's get this in contract, and let's go from there. So I don't think that developers, at least in this neighborhood right now, under the current 421, really have the choice. You'd have to take that risk like Sam did a couple of years ago, and then again last year, to really control it from the start.
How big is the pool right now? Who's looking for these like large sites? Who like might be out there in a couple of years and buy something?
It's a very deep buyer pool. For 100,000 square foot buildable anywhere in Brooklyn is going to attract a deep buyer pool. In Gowanus in particular, it's not only deep in Gowanus just because of the size and scale, but a lot of developers have wanted to buy in this neighborhood, but their capital partners just didn't have the stomach to take on zoning risk.
It's like 10 or like 20 or like is it like, just to get some idea? I mean, it's always sort of infinite, but kind of.
Yeah, I would say if 421A were not an issue right now, and we just got past the rezoning, you put out a 100,000 square foot site, you'll get 20 solid written offers on that site. You'll probably have a buyer pool of 150 developers interested in the site. And through the process, you'll probably whittle it down to maybe a couple dozen. And then from there, it would get hyper competitive. Now, there will be a breaking point on the assumptions that people can make, but even with this looming 421A issue, we're still seeing people willing to take that risk in that sort of 250 a buildable, ballpark.
One of the things that it's this rush that things have to get done like right away, and what we've seen are that people file plans that are they're like dummy plans, but are just sort of out there, and it's not just here. People are filing all over the city. What is that? How does that work? And then how do you then file a plan after that?
Yeah. So I mean, we have done that in different iterations in the past. We've done it on sites that are going through entitlement changes. So if there's a M zone site that I own that I knew we were going through a ULURP process on, we potentially would file a foundation that would mimic what the final products foundation would look like, and build a one-story or file for a one-story industrial building, knowing that once approval were of a rezoning were to come through, we would amend plans or change the NB. We've certainly done that as well here. In Gowanus, there are a multitude of city agencies that you need to work through in Gowanus, which add additional complexity to developing in a neighborhood like this. Not only are you dealing with DOB, but you're dealing with CPC, city planning, DEP, DEC. If you have a waterfront site, you are now also dealing with DOT and the parks and getting a waterfront access plan approved. So there are a lot of additional complications and red tape that go into getting a site permitted in Gowanus. So there are ways to file sets which will allow you to start foundation for the purposes of entitling for 421A, but not really moving forward until you get the formal approvals from the rest of the city agencies. And a lot of that is set up because the city understands, especially the new mayoral administration, that these sites won't get built without this program. Legitimately, housing will decline and even come to a halt without a tax abatement program like the 421A in place. So the last thing that Mayor Adams wants to see on his watch is a lot of bureaucracy stopping thousands of units and in particular truly affordable housing units at very low AMI income bands from getting built. So the city is certainly helping to ensure that developers get entitled right now and can proceed with their business plans.
And to that point, Sam, we've seen that happen. In 2015, when the previous plan expired, and they didn't adopt a new one until the end of 2016 or beginning of 2017, building permit applications dropped considerably. The only sites that sold were ones that had qualified under the previous plan, and we could be repeating that same sort of position if this lapses or doesn't get extended, or some sort of new program comes into place that's relatively close in the scope of the current plan.
One stepping to like another issue, another way of looking at what's happening in Gowanus, the east side versus the west side of the canal. I get Sam, if you want to kind of talk about the personalities, or are they going to be different, or are they not going to be different? And
Sure.
Dan, your take.
Yeah, I think that's a really good point. First of all, they're going to feel different just because of the neighborhoods that they abut. So like the eastern side is going to feel more Park Slope-ish just because of its, adjacency to Park Slope. The western side most likely is going to feel more like Carroll Gardens and associate more like Carroll Gardens, although they will be one cohesive neighborhood because they will be new buildings that are effectively of the same era, built at the same time. Another interesting nuance between the two sides of the canal, and why we focused on the eastern side, Park Slope side, when we were acquiring sites over the past years, was the east side of the canal is a QOZ, it's a qualified opportunity zone. So under the recent tax code changes, when qualified opportunity zones were set up, we realized that there was a abundant amount of capital out there for QOZs, and we wanted to make sure that capital was coming to New York and not going to QOZs in other parts of the country. So we said, if this is a QOZ, and we do think it's probably one of the best QOZs in the country, we want to be buying there and we want to be developing there. So we found that aspect of those sites on the eastern side of the canal to be quite advantageous and desirable.
And Dan, sort of the personalities between the sides, is that an issue in terms of buyers?
Not particularly, unless they are QOZ buyers. I think you cannot look on the west side of the canal because it doesn't qualify. I think the east side, it's a really nice to have, but as Sam will tell you, the properties have to underwrite on their own merits, and being a QOZ is going to change the way that the capital is looking at the deal. But by and large, the land value, we have not seen a significant difference between the land value on the west or east side. Let's put it that way. I agree with Sam. I think the west side is going to identify more with the Carroll Gardens, and the east side more with Park Slope, but I think the east side is going to be more of its own Gowanus identity. I think you will see development sites on the west side perhaps even being marketed as Carroll Gardens properties, an extension of Carroll Gardens. I don't think you're going to see sites on the east side marketed as extensions of Park Slope, because Gowanus in its own way is very interesting and cool, and there's a lot of great history about the Gowanus neighborhood that I don't think people want to see lost. I know developers like Sam certainly wouldn't want to see that. But keep in mind, it's been a joke forever, but the Gowanus Canal, yes, it's a super site. Yes, there's a lot of cleanup that needs to happen, but also this is going to be the great connector of these neighborhoods. At some point, this is going to be a clean canal and it's going to be an active space. But even before that, you're going to have half a dozen beautiful new development sites activating that esplanade, that waterfront access. There's going to be cafes and restaurants, and there's going to be this whole new commercial draw to that part of the neighborhood. And you'll be able to connect, whether it's over the Carroll Street Bridge or Union. There are going to be a few critical connecting points right there that Sam side on Evans Street touches both. But that's going to be a really interesting place to focus from a commercial connectivity, community gathering place, where they don't have to go over 4th Avenue. They don't have to go into Carroll Gardens. They're going to have their own amenities and ways to come together here, right in the middle of the neighborhood. So I think that it'll all complement each other. And I don't think there'll be too big of a difference, honestly, if you're living on the west side or the east side of the canal from an amenity standpoint. From a marketing standpoint, you may see some subtle pushes on the Carroll Garden side, but I don't expect too much more than that. Well,
I think now come to the end of the broadcast. Actually, I had a couple other questions, but I'm gonna have to ask them quietly by my, in an email. But so I want to thank you both for taking this time. That concludes the broadcast. We're gonna publish this program on our YouTube channel. That'll be tomorrow around noon. And then everyone who's listening will get a link to that. And we'll look forward to future broadcasts next Tuesday. Thanks for joining us and have a great afternoon.